Hi everyone, today I thought I would do a little bit of an update into a stock that I talked about 2 years ago about buying and talk about how amazing that stock has done. And it was 2 years ago that I actually called this stock the best dividend stock to buy. And I wanted to kind of finish this kind of week or this weekend on a bit of a positive vibe. I feel like even though we've had a very good week or a couple of weeks in the stock market, apart from Snapchat spoiling a bit of the fun, I feel like we've had a pretty good time in the stock market recently, and still there's a lot of negativity out there, and I wanted to kind of address something that to do with that negativity. And I thought the best way to do that is just talk about a really good stock in the last 2 years that I've been owning and been talking about on this channel. So yeah, 2 years ago I called it the best dividend stock, and if you bought that dividend stock 2 years ago when I started buying this company, which is Airtel Africa, you would currently be up over 200% on your position. Now for me personally, I'm not up 200%, I'm actually up 100 and something percent. The reason why I'm not up 200% is because also over that 2 year time frame is I've actually been averaging up slightly on my position when I can, when it has a few dips. I've been buying a few more shares into it because when I look at the business, it's still an amazing opportunity and I still think there's plenty of upside, so I'm capitalizing on it when it does have dips. But still, it's performed absolutely amazing, and even right now, I still think this is potentially the best dividend stock on the stock market. And actually excluding the share price appreciation, I'm actually collecting a massive dividend yield on this stock. So at the moment I'm somewhere around about a 6% dividend yield on this company. So as well as collecting major amounts of share price appreciation, my dividend yield alone is kind of nearly matching the S&P's average return nearly every year. So that is absolutely amazing. And I think as well, when you consider what this company is doing, they're going to be hiking that dividend up in the future, meaning I'm also going to be collecting an even bigger yield, which is absolutely amazing. And the other great thing about this business is that when you look at how well this has performed so amazing in the bear market. In the bear market, there's so many stocks that are down, whether you're UK stocks, US stocks, even the risky stocks are down massive amounts, but even the really safe stocks are down absolutely huge amounts. And when you look at the kind of indexes, how many stocks are down in them indexes, there's a lot down. And when you look at this stock, it's one of those few stocks that, even though we're in a bear market, has just been plowing higher and higher and higher, which is also great, because when you think when we move out of the bear market, it's going to be really exciting to see how this company does. And the other thing is, what makes me laugh is everyone always forgets the ones that are up. People always forget the ones that you sold for profit, the ones that are actually doing really well. And it's funny to see, like, in a bear market, everyone focusing on the negativity rather than looking at the positivity, or looking at, okay, actually that makes sense that we're down in the bear market. So I thought it was a good one to remind people of how good of this investment has been. And also I think that one thing that at the moment I've seen a lot of negativity, especially negativity on my channel and abuse on my channel towards me when making these videos. And I generally look at it and I think, well, it's one of the reasons why I get so much negativity on the channel right now, when personally for me, I think when I look at my portfolio, I'm like, yeah, it kind of makes sense that I would say half of my stocks are currently down at the moment because we're in a bear market. It's the exact same if you looked at the S&P 500 holdings. I'd say that half of the S&P 500 holdings are down a bit at the moment. And I'm like, trying to understand why there's all of a sudden so much negativity. And then I'm thinking, well, maybe one of the reasons why I attract a lot of negativity, and don't get me wrong, there's over YouTube as well, again, a lot of negativity at the moment, but I feel like probably one of the reasons why I personally get a bit of negativity at the moment is that because I am transparent. I'm probably, I would argue, one of the most transparent YouTube channels on the scene. I talk about every stock. I especially talk about stocks when they're down. If I have a stock that goes down, I'll talk about that. I'll give my updated thoughts on that situation, whether I'll buy, whether I'm selling. And I think as well is because I'm very transparent on what I own. There's some channels that even hide what they own. There's channels on the YouTube scene that come on and criticize other YouTube channels, everything money, and then don't even say what they're buying, which I think is just absolutely hypocritical to do when you're not even revealing what you're buying. I think it's also my transparency that I'm saying what I'm buying, what I'm selling, this is what I'm owning. I'm on here sharing everything, and that I actually come out and talk about the stocks when I'm down. I'm not a YouTube channel here that kind of buys something and then talk about it and then, oh, it's not working out, so I'm going to sell it quietly in the background. I think it's because of my transparency that everyone knows what I own, that sometimes can and also that I talk about the negative stuff that gets me into a bit of trouble. Whereas if I was a bit of a channel that kind of, talks about, okay, let's just talk about Airtel Africa all the time because it's doing absolutely amazing, or if I talk about InMode because that's doing absolutely amazing, or Greg's that we sold for 100% profit and that's still doing amazing, up 30%, or Pinterest that we sold for 300%, or JD.com that I'm currently 300% up on, or Microsoft that I'm up 150% up on, or Celsius that I'm up 40% on, or Hims that's just gone on an absolute crazy run over the last few weeks. It's up, over 60%. If I was talking about them stocks all the time, maybe then everything would be a bit more positive, and maybe I should start being a bit more of a channel that kind of hides the negative stuff and only talks about the positive stuff. I mean, maybe you get a bit of a better reputation of it, and maybe the transparency is a little bit of a cost here. But I thought it was just a bit of a funny one to talk about, so I thought, you know what, let's talk about some positivity to finish on the weekend, and also talk about this amazing stock and how much opportunity this still has left in it. So Airtel Africa, absolutely amazing dividend stock. As you can see here, the share price appreciation has been absolutely insane, up over 200% since we started talking about this stock on the channel. It's currently a 6 billion market cap, which is quite a large business for a UK company. It trades at 11 times earnings, which I think is one of the key things here. One of the reasons why I think this has upside is because when I think we come out of this bear market, I think this will actually trade at a bit of a higher multiple. So one of the key things to have a stock do really well historically is obviously more profit, more revenue, better profit margins. But also one thing that really helps is a multiple expansion. So for example, if it trades at 11 times earnings, that company then goes on to trade at like 18 times earnings. And I think that Airtel Africa is that. I think it's a company that should be trading at the higher teen range of a valuation, and that generally alone would actually put that towards nearly 100% share price appreciation. Now I think it trades at a lower multiple because we are in a bear market. I also think it trades in a little bit of a lower multiple because it is operating in Africa, and I feel like maybe political risks potentially means it trades at a lower valuation. But when you look at the growth of this company, a normal company that's putting this growth in isn't even historically like trading like 17, 18, 19 times earnings. For what this company is doing, you normally pick a company like this up at, I would say, high 20s, 27, 28, 29 times earnings. So even my conservative multiple expansion is very fair, because I think this, even then, it would still be trading at a very big discount for a political risk basis for what it should be. So yeah, 2.4% dividend yield at the moment, which is still a very attractive dividend. I'm obviously picking up a lot higher yield because I have a lot of a better share price entry price than where it is now at £1.65. It operates telecommunications, which is massive in Africa. They are in multiple countries, as you can see here, 14 countries in Africa. So the income is very diverse in the countries. So if something happens to one of the countries in Africa, it still has another 13 to fall back on. Telecommunications is quite big. Voice messaging and voice data is the kind of one part of the business, but one of the big expansions is like the internet data. There's not a lot of like what we would have Wi-Fi systems built in like Europe, for example. Over there, it's not as much established. So what people ought to do is mobile data. So that's a massive growth area in telecommunications in Africa. As well as that is mobile money. So this is a smaller part of the business which is growing massive, and this is one of the key things to be looking at in the next 5 years. Africa itself doesn't have that much established banking system out there. A lot of the banking system in Africa is done by what you would use as like traditional like PayPal systems, and Airtel Africa are in there with their own kind of version of PayPal, and that is an area that is growing massively as well, and that's one thing to be really keeping an eye on. Now it is worth pointing out that I am making this video and they are going to be reporting earnings next week on Thursday, so this will be the next 3 months, which I believe is their Q2. So yeah, just be careful of that. But yeah, going on to the recent news, or their full year results, reported revenue grew by 20%, and in Q4 17%, and constant currency underlying revenue grew 23%, which is impressive. Like we said earlier, to have 20+% growth, you're also picking up a dividend stock, 2.5% dividend yield at 11 times earnings. Pretty impressive. And when you look at what's going on inside the company, revenue voice is up 15%. That's one of the slower parts of the company that's growing, which is still very good. Data, this is one of the key parts to be looking at, up 34%. And mobile money, which is especially the key one to be looking at, is up 35%. Underlying EBITDA was up 29% and profit after tax grew by 82%. So as well as having a bit of a revenue growth beast here with very diverse income coming in, they're also growing this profit at very good rates as well, which is really key. And also, if you look here, they actually reduced their debt by a massive amount as well, which is really good, because the only concern I originally had with Airtel Africa was the financial health of the company. It was a bit debt heavy, as you can see here, when I started buying it. You know, it's nearly 100% debt to equity. That has now reduced to 62% debt to equity, which is really positive to see. Now, like I said, valuation wise, 11 times earnings is incredibly cheap for this company. Simple Wall Street actually have the fair value at £7.10. I personally wouldn't have it at £7.10. I think that from this company here, I think there's 100% upside. So I would put that somewhere around about £3 to £3.50. But obviously Simple Wall Street are a lot more bullish than what I am. If you look at the future growth here, analysts are predicting still really positive amounts of growth, you know, high 10% growth, which would be absolutely amazing. Obviously high 10% growth for this company would be great. And also that would also lead to more share buybacks, should command a higher valuation than what it does at the moment. And this is the thing with this business, is that when I start talking about this company saying, you know, 2020, they're doing 370 million in profit. Now they're doing, you know, 631 million profit. They're doing nearly double what they were doing back here. So in that time frame is that this company is exactly the same valuation as where it was 2 years ago. And I've had this share price appreciation. So now the company is exactly the same valuation where it was 2 years ago, and we had this same share price appreciation. It is an absolutely, you know, bargain valuation, because I bought it at this valuation 2 years ago and I got the rewards. So why would I not buy it at the same valuation again? Like I said, I don't know if it'll have this kind of run up that it's had previously. Obviously this run up's been absolutely amazing, but I do think it will have some amounts of profit growth and also collect that dividend. And also I think that it does trade at a very good valuation. Dividend wise, like I said previously, I think they've got a lot of room to grow this dividend. You can see here that Simple Wall Street are very bullish on them growing that dividend in the next few years. We'll see what happens there. And there has been a little bit of buying inside the company as well, which is obviously a positive sign. So that's a bit of an update on what I think is probably the best dividend stock out there on the market. It's performed absolutely amazing. For a dividend stock to be collecting in a massive amount of dividend yield and then have that share price appreciation is really positive, and I think it has a great future ahead of it as well. And let's look forward to earnings next week. So I hope you enjoyed it. Well done to you guys that own this stock. It's been an absolutely amazing performer, especially in the bear market that we're in right now. So I hope you enjoyed the video. Have a good weekend, and I'll see you on Monday.